All right, let's get right into it. But first, the important stuff. You know the drill. Remember, everything you're about to see is for educational purposes only. This isn't financial advice. All trading involves risk, so you have to do your own research. Okay, let's get to the good stuff. Today, we are dissecting a company that's right at the heart of this whole AI explosion. Lam Research, ticker LRCX. This thing was an absolute rocket ship, hit a new all-time high, and then it took a breather. Now, for traders, when a monster stock like this pulls back, that's often where the opportunity is. So let's break down what's going on here. So what's the number we're looking at? 6.5%. That is how much Lam Research has pulled back from its peak. And whenever you see a high flyer like this pause for a moment, you have to ask yourself one really important question. Is this just a healthy pause? A chance for the stock to catch its breath before the next big move up? Or is this a crack in the foundation, a warning sign that the momentum might be fading? That's the million-dollar question, and that's what we're here to figure out. Let's dig in. Before we even look at a single line on a chart, we have to understand what we're dealing with. A beautiful chart on a bad company is a trap, plain and simple. So first, let's quickly go over why Lam Research is such a powerhouse in the semiconductor space. To put it simply, every single advanced chip, whether it's in your phone, your computer, or a massive AI data center, was made using these incredibly complex machines. Lam Research builds some of the most critical ones out there. They're the masters of etch and deposition, which is basically like being a microscopic sculptor, carving and layering materials to build a chip. They are an absolutely essential piece of the entire AI puzzle. Now this is what I love to see. It's one thing to sell a big machine once, but look at that other 28% of their revenue. That comes from customer support. You can think of it as a super high-tech subscription service for their multi-million-dollar equipment. It's stable, it's predictable, and it's a cash flow machine that provides a really solid foundation for the whole company. And calling it growth is kind of an understatement. Just look at these numbers from their last quarterly report. Revenue up 22%. That's fantastic. But earnings per share, the actual profit, exploded by almost 40%. This shows you it's not just a company getting bigger. It's a company that is becoming incredibly profitable as it cashes in on this AI gold rush. And this isn't just about Lam Research. The entire market for the equipment they sell is projected to swell to $135 billion. You know the saying, a rising tide lifts all boats? Well, Lam is one of the biggest boats in the harbor, perfectly positioned to ride this massive wave of spending. Okay, so we've established the company is a rock star. The fundamentals check out. Now it's time for the fun part. Let's turn to the chart and see how this all translates into a potential trade idea. We're shifting gears from the why this is a great company, to the when and where a trade might make sense. So when you look at the chart, the main trend is just undeniably up. What we're seeing right now, this little dip, isn't a breakdown, it's just a pause. Think of it like a marathon runner grabbing a quick cup of water from the sidelines before getting back in the race. This is healthy, totally normal price action for a strong stock. All right, these are the only numbers that really matter for this setup. The ceiling, or where sellers might step in, is around that $245 mark, and the all-time high up at $252. The floor, where we expect buyers to show up, is right around $228 to $230. But the real line in the sand, the point of no return for this trade, is $220. If that level breaks, the whole bull case is on pause. Now here's a subtle but really powerful clue. Take a look at the volume. On the days the stock went down, the red days, the volume was pretty light. What does that tell us? It tells us there's no widespread panic selling. The big institutions aren't dumping their shares. If anything, they're just letting the price drift down, maybe even scooping up a few shares. That's a sign of real strength. So with strong fundamentals and a constructive technical picture, now we can build an actionable plan. This is the most crucial part of any trade. You have to define your entry, where you'll get out if you're wrong, and where you'll take profits if you're right, all before you risk a single dollar. So here's the game plan, step by step. We're looking for an entry somewhere in the zone of $228 to $232. Our emergency exit, the stop loss, is a clean break below $220. And we're not going to get greedy. The plan is to sell half the position at our first target of $245, take a little more off at the all-time highs, and then let a small piece run. This strategy of paying yourself along the way is key. By the way, I put together a very detailed report with all these numbers and more, and the link is right down there in the description for you. And when you do the math on that plan, this is what makes it so attractive. The risk-to-reward ratio is 1 to 2.4. That just means for every $1 you're risking, you have the potential to make $2.40. As a trader, you always want to look for these asymmetric opportunities, where the potential gain is significantly bigger than your potential loss. And let's be clear, this is not a long-term investment. It's a swing trade. The idea is that this should play out over a matter of days or maybe a couple of weeks, not months. The plan here has us holding for somewhere between 5 and 14 days, with a max hold time of about 3 weeks before we'd have to reevaluate everything. Look, no trade is a sure thing. So it's absolutely critical that we look at both sides of the story. What could push this trade forward and make it a huge winner, and what could cause it to fail? Let's break down the bull and bear cases. Okay, the bull case is pretty simple. The AI boom is real, it continues, and this stock goes higher. The bear case, well, a surprise from the Fed could sink the entire market. Or maybe that insider selling we've seen is a bit of a red flag. And you have to respect that the stock has a beta of over 2. All that means is that it's more volatile than the market. So if the S&P 500 drops 1%, LRCX is likely to drop over 2%. It's a sports car, which is great on the way up, but it cuts both ways. And this brings us to the single most important rule of this entire setup. Discipline is everything. That $220 level is our line in the sand. If the stock closes below it, the thesis is broken, the plan is to exit. No hesitation, no second guessing, and definitely no averaging down. That's how you manage risk and protect your capital. So let's just do a super quick recap of the 3 main ideas here. 1. We have a fundamentally dominant company at the center of a massive market trend. 2. The stock is in a healthy, technical pullback to a very logical area of support. And 3. This creates a specific trade plan with a well-defined and very attractive risk-to-reward ratio. So that's my analysis of the setup, but now I really want to hear from you. Are you watching LRCX? Are you bullish, bearish? What's one thing that you see on the chart that really stands out to you? Drop a comment below. I read every single one of them. And remember, for that full deep dive report, the link is right there for you in the description. If you got any value out of this breakdown, it would mean a lot if you hit that subscribe button. I've got another setup I'm watching very closely that I'll be sharing with you next. And we'll end right where we started. Please remember, this analysis was purely for educational purposes, to show you how a trade plan is built from the ground up. It is not a recommendation to buy or sell any security. You always have to do your own research and make your own decisions. Thanks for watching.